I cannot speak highly enough of this gentleman. Actually, to be perfectly honest, we were both born in the same country, Turkey or Türkiye. His name is Cem Karsan. Okay, that's the Turkish pronunciation of his name. He's a brilliant man, and he still, is on the Chicago Board of Option Exchange. He has created multiple companies, sold them. You want to listen to anybody about Greeks, about option Greeks, obviously, about volatility, about anything, just go follow him on Twitter. He has, I think, a YouTube channel too now. His name is Cem Karsan. So Cem has been talking about, a lot of Americans call it Chem. So his name is Cem. But long story short, he's been talking about the lost decade. Okay. And he started talking about this in 2020. He goes, "This is going to be a lost decade." And he on this last pullback, by the way, he was like, to the day, he was accurate. I do listen to everything he says because I respect his opinion. But besides that, his knowledge, his experience, right? So he's been talking about this lost decade in U.S. stocks and U.S. bonds. Okay. He says stagflation actually has been around since 2020. Okay. And I started talking about stagflation about 4 or 5 months ago. But now everybody's talking about stagflation. So I think it's the most Googled word now on Google search. So stagflation is stagnant economy with high inflation. And that's what it seems like we're going into. Well, we are in one. The only reason we didn't go in one earlier, with the true definition of it, is because of loose monetary policy, low interest rates over all these years, right? So what's worse? Okay, what's worse than inflation? He goes, stagflation. Absolutely. Inflation we can control. How do we control inflation? Raise interest rates, which we did, 0 to 5.5%. Albeit behind the curve a little bit. We did. Okay. So this is his Twitter handle, Cem Karsan, but his name is Cem Karsan. He goes, breaks down his thesis on stagflation and why we may be entering a lost decade. A structural shift that echoes the 1970s, but with even more complexity. I 100% agree with Cem on this. I think we are in the lost decade, because I'll look at the charts with you guys after this segment. And lost decade meaning stocks don't go anywhere, bonds don't go anywhere. And we'll look at the bonds and we'll look at stocks, where we've been, where we are. And let's see if you guys agree. If you guys agree, great. If you don't agree, sure. I'll put the link up in a minute and you guys can come on and talk about it with me. So lost decade. Well, lost decade means asset prices, with the exception of gold, obviously, or Bitcoin, right? The most liquid or major, held asset classes. What are they? Stocks and bonds. Bonds being much larger than stocks. They haven't done anything since actually 2020. Because if you look at where the stocks were at 2020, right? The high, and then we had the correction, and then we came back up, made a new high. Well, we're giving up what we got last year. Maybe we'll give up, according to Cem, we're going to give up what we got the year before as well. So we're back to square one. Yes, there's opportunities in all of this for traders. Investors, not much. If you've been DCAing into indexes, which I highly recommend over a longer period of time, that does wonders. But do I agree with Cem about lost decade in bonds and stocks starting with 2020? Yeah. And again, my prediction for this year, except outside high volatility, people have short memories. Most people got involved in stocks or bonds or options in 2020 during the pandemic. We're all stuck in our house, government sending us money. We open a Robinhood account, we swing some options, make some money. We think everything is great. Wonderful. None of these new Robinhood YOLOers, FOMOers, hodlers, all the stuff that has come around since the pandemic, they haven't experienced a recession, true recession. They've experienced a couple of shocks, like the Japanese yen carry, trade crisis. We had the higher 0 to 5.5 interest rates increased at the Fed, started in 2020 because the inflation is getting too hot. We had that, but a true recession has not taken place since 2008. Pandemic is a black swan event. It was like a sharp 50% drop and a V bottom. But that's all, and everybody is used to buying the dip and making money, buying the dip and making money. Well, I think in 2008, if you go study history, it's not that far back. I'm not going back to the dot-com bubble because that was a different story altogether. But just study what happened in 2008. Study how long it took for the market to go down and how long it took to recover to new highs. It took years. And now, I don't think we're going to crash. I mean, we may end up going down 40, 50% from our highs. We may get down to 4,000 in SPX. Okay, we're down 30, 40%. Well, that's your lost decade. And then within this lost decade, though, there will be ridiculous rallies and ridiculous pullbacks. With increased volatility, I'm expecting that. And I'm hoping I'm sticking around and making some good money with all that volatility that's presented to me. So, yeah, lost decade. If you're DCAing, dollar cost averaging, yes, you may have a lost decade. But if you're young enough and you have a longer term horizon, there is no lost decade, man. You keep DCAing, and then you will come way ahead, way ahead.